Hey guys, welcome back to Ruben Tech. Today we will be going through a real world example of how theta decay can be a bad thing for you. So the first thing we're going to do is we're going to talk about exactly what theta decay is. And then the situation I'm going to show you is something that happened to me on Friday. But I want to show you this because I don't think a lot of people talk about theta decay. And it's something that's really important if you're going to be trading options. So let's go ahead and get to the screen here. First of all, I asked Gemini and it did an excellent job explaining it, so I just figured I'd go right from here. We'll just do this quick and we'll get to example in Robinhood in just a moment. Theta decay is a gradual decline in the value of an option over time. It's a key factor to understand in options trading as it can significantly impact your profits or losses. Throw myself down there. Options have a limited lifespan. Unlike stocks, options have an expiration date. As time passes, the probability of the option becoming profitable decreases and the value erodes. Theta measures time decay. Theta is one of the Greeks, which are calculations that help assess the various risks associated with options trading. Theta specifically measures how much an option's value is expected to decrease each day. Theta is expressed as a negative number for long options. If you buy an option, you have a negative theta. That means that all else being equal, your option's value would decrease each day. Theta is expressed as a positive number for short options. Again, what we're seeing here is that theta is negative if you're buying long. That means if you're buying a call option, right? Theta is working against you. It's negative. But if you're selling a call option, then theta is actually working for you. Theta is expressed as a positive, and if you don't know anything about options trading at all, I do have other videos on this channel, or you can just Google it. A lot of people have great videos. I think my videos are pretty concise, but maybe you like somebody else's too. Theta expressed as a positive number for short options. If you sell an option, you have a positive theta. That means that all else being equal, you benefit from the option's value decreasing over time. Theta decay accelerates as expiration approaches. The rate of theta decay isn't constant. It accelerates as the option gets closer to its expiration date. This is why options lose value more quickly in the final weeks or days before expiration. And theta is affected by other factors. While theta measures time decay, other factors can also impact an option's values. These include underlying asset price, volatility, interest rates. There's a ton of things that can affect it, right? I'll go into some of those. There are some key things to remember about theta decay. Theta is the highest for at-the-money options. At-the-money options where the strike price is close to the current price of the underlying asset generally have the highest theta. Theta is lower for in-the-money and out-of-the-money options. And in-the-money options where the strike price is favorable compared to the current price, and out-of-the-money options where the strike price is unfavorable have lower theta. I will cover all of that. I'll even give you an example. Theta can be used to your advantage. While theta decay can work against you if you're holding long options, it can also work in your favor if you're selling options. We covered that above. Many options trade strategies are based on profiting from time decay. Here are some examples of how theta decay can impact your options trade. Buying a call options. If you buy a call option, the underlying stock price doesn't rise enough to offset the theta decay, you can lose money even if the stock price moves in the right direction. Selling a put option. If you sell a put option and the stock price stays above the strike price, you can profit from the theta decay as the option's value decreases over time. In conclusion, theta decay is an important concept to understand for any options trade. Okay, that looks good enough. Let's go ahead and get to the real world example here. So you might be asking, why am I talking about theta decay? Well, because of this situation right here. We have right now a longer weekend. We have Saturday, Sunday, Monday. And I have a big decision. So I had bought these NVIDIA call options at 139. And let's just go through the history. I bought 20 contracts at $1.02. So I spent $2,040. And I bought these on February 5th, which would have been what? 10 days ago? It's today the 15th? Yeah, 10 days ago. And then you can see I sold half of these yesterday at 305. Right before the bell, they had sprung up to 305. I almost caught it the peak. I think maybe the peak was like 308. Doesn't matter. And I sold 10 of them, half of them. So I got a profit already of $1,000 of $1,010. Okay, and I still have 10 options remaining. Now, part of me thought, should I sell all of them? And here's the reason why. I want to show you guys exactly the problem that's going on. And it has to do with the 3-day window here and how theta decay affects, okay? So first of all, let's just take a quick look. These remaining options I have, they dropped a little bit. I sold right here, 303. You can see that down below. Actually, I got a little bit more, 305, so it was a little bit above that. And then at closing, they dropped to 288, so there's a little bit of a dip. And then I don't think there was much aftermarket because the markets are closed because of the holiday, President's Day or something. So right now, these are holding a value of, it says this, but this isn't actually correct, okay? Because Theta is going on even during the weekend. It's just that we cannot sell these during the weekend, so there's no reason for Robinhood to update the price. We will look at the simulator though. But when market closed, like let's just say a minute before market closed or 30 seconds, I could have sold these for $2,880. So I could have closed out this trade with about, what would that be? $4,000 in profit. Wow, I should have took that. Is that right? I paid $2,000. I made $1,000 on this, and these are remaining at $3,000. Yeah. Damn, I should have took that. Okay, never mind. It doesn't matter. It does matter a little bit. I would have saw that and I would have thought about that. I guess I was getting a little greedy. Anyways, I just didn't remember that. So we come down here to the theta and we can see that's working against us, right? So it's negative and it's 0.2637, right? So this is what's working against us for each day. It's going down negative, right? So if we look at this and I want to simulate my returns, and this is assuming that the price stays as is. Let's just assume the price stays as is, right? And we look at 16th, this is going to be Sunday, and then 17th, and then on the 18th, market opens at 9 p.m. my time on the 18th, right? 17, yeah. So so it'd be 9 a.m. and it's like 9:30 actually. So we'll just say 9 a.m. And you can see, look at the price right here, $720 is what it's going to drop to if it stays at this 138.48. Okay, so theta is crushing me, right? It's going to take me from where I am, or like right now it's 1370 just from the day that it's been already, right? So it's already dropped 239 to 239 is a simulated return right now. Okay, and if it stays at this price, it's going to drop even further. Okay, so boy, now that I look at this, I feel a little bit dumb. I should have just grabbed the cash, and I did take half of it. But I have a feeling NVIDIA might go on a big run next week, so that's why I did that. So I'm into profit 1,000 at least. I could have been in profit 4,000. That would have been what, 200% return. That's pretty good. Probably should have did that. I didn't. Doesn't matter. But the reason I did this is that I took some profit because I knew the theta was so bad over the weekend, okay, because of the 3-day weekend. And I want to show you that. So imagine at the bell, remember at the bell yesterday, these options were 28.80, okay? So already due to theta, we are what, 7, 8, 32 hours out. We're 32 hours out, okay? And so as of right now, this moment, the option contract price is 239. Okay, that's 32 hours out. So what did that drop? 239 was estimating. That would be 239, 288. That is 49 cents, right? Because 40, 48, yeah, 49 cents. And that's in what? Almost 2 days. And so it's supposed to drop, I think, 26 cents a day. Yeah, 26 cents a day. So that's about right. Right? So it should be 52 cents. And then it's going to lose another 52 cents for $1.04 basically by the time the market opens. And so it'll be like $1.76 roughly is what the simulator should say, somewhere around there. And so we'll come back over here. Of course, that's not going to be exact because of the hours, but it's going to be close. And so we can see that right over here on 18th. Yeah, $1.76. Holy cow, it is exact. Wow, that's amazing. It worked out exactly. So the math worked out perfectly. Okay, that's funny. Well, I suppose it's just simulators just going off the math purely. So honestly, let me know what you think about that. Now I'm going to show you some things just so you can understand. So remember that we talked about, this is Meta. I bought this, I don't know, a couple of months ago. October 7th. I bought it at $298.50 and it's worth 430. So this is a deep in the money. This is like owning Meta stock, okay? And so we can tell that because the delta is 0.9891. So that means for every dollar that Meta moves, the stock, the underlying asset, I'm going to capture 98.9% of that movement, right? And you can see the theta is extremely low. It's still against me, but it's only 5.5 cents a day, 5.6 cents, right? 5.5 cents basically. And that's because this call option is way, where's actually, oh, 919. So this has still got 8 more months to go, right? So, I mean, data here, still working against me, but doesn't matter as much. So that's where we're saying buying something closer to, expiration date is obviously more risky for theta versus something very long. Okay, guys, so I think that's all I got for you today. We just went ahead and we looked at some real world examples of how theta affects different kinds of options. All right, have a great day.